How do you start a bank?
That was sort of the business model that we had, which is we want to continue doing the best at what we do, which is government guaranteed lending for small businesses all across America. We funded about $5 billion worth of those loans in a absolutely insane time. You have a vision, you execute on the vision. So I oftentimes tell entrepreneurs debt is much cheaper than equity.
Welcome to today's episode of Free to Lead, journeys of leaders driven by passion, inspired by purpose. And today I have Chris Hurn with me. He's a powerhouse in small business lending and a two-time CEO of the year. As president and CEO of Community Bank Shares, he's helped fund over $28 billion in projects and played a pivotal role in shaping the Paycheck Protection Program, saving nearly 500,000 jobs. He's a best-selling author, investor, and passionate advocate for entrepreneurs across America. This is a conversation about leadership, legacy, and impact at scale. With all that, Chris, welcome to Free to Lead.
Thanks for having me.
How did you end up the CEO of, well, it's kind of a bank, right? It is a bank that you...
To the bank.
Right? I mean, how did you get there? What's the backstory?
Well, the backstory, real short, is I grew up in an entrepreneurial family. My single mother raised me. She was a chocolatier, learned a lot about how to market, sell, assembly line, manufacturing, all sorts of things. Eventually went to graduate school. Was the first in my family to go to college and came out with a degree in an MBA and decided to was very good in sales and marketing at a high-tech startup outside of Washington, D.C. before that became fashionable to do. And recruiters come calling, and I had an opportunity to join GE Capital, which at the time was the largest non-bank lender in the world, most admired company in the world at the time. Was there for about 6 months before they decided to move my wife and I to Orlando, Florida, although I had a couple other options, and to start working in their small business financing unit. And I thought this is an opportunity to basically help finance other entrepreneurs' dreams. How do I pass this up? And, that led to me, becoming one of the most successful folks there, recruited away to the second largest non-bank lender at the time, who GE later bought. And I always joke they could have just gotten rid of my compensation cap that they had in place and would have saved them a lot of billions of dollars instead of buying at the time. I eventually left the industry for a few years, was a management consultant, came back to the industry basically on my terms. That was a key criteria, and launched my first small business lending company on my own. This was back in late 2002. Did tremendous with that. 3 years in a row, we were on the fastest growing companies in America list, the Inc. 500. Eventually, we sold it to a bank. I stuck around for about 3.5 years and then tried to buy it back. And they did not want to sell it to me. They were selling themselves to a larger bank. So I went off and started my second small business lending company. Ran that up, did the PPP program in America during the pandemic. We funded about $5 billion worth of those loans in a absolutely insane time. Did about 300,000 loans in what really amounted to about 6 months time between the different rounds of that program. And then I had two partners who decided they wanted to take their ball and go home, sort of metaphorically. I'd made them so much money, quadruple digit returns, that they just wanted to move on. That was very tough for me and my team. And so I talked to a couple of folks I knew in the industry and who basically said, we're okay with what we do in terms of small business lending, but you guys are some of the best. Any chance we could move your whole team over here and you could come over with them and run this operation? And I said, that's very intriguing. And I thought about it for a couple of days, and then we jumped at the chance. And so I moved about 95% of my team over. I run the Community Bank Shares is a bank holding company. Initially, I was the president. Now I'm also the president and CEO of it. We have three divisions. One is Community Bank and Trust, which is a bank, obviously, that funds all of our loans. and collects deposits just like a traditional bank, although we're very business bank focused. We don't do much in the consumer space. Then we have another division called Phoenix Lender Services. I'm actually the president and CEO of that as well. And that is what's called a lender service provider. And our first client is, of course, our sister company, the bank. But now we actually have other banks that hire us to do some of the back office things, underwriting, closing, servicing of various commercial loans. And then we have a third division, which is Thomas Financial Group, which is what's called a loan packager. They specialize in another government guarantee program in America, USDA business loans. And I'm actually at the moment the interim president of that. I don't need any more titles, but that's what we do. We are the largest USDA business and industry loan lender in the country. We're the largest SBA lender based out of the state of Georgia, and we're the 30th, I think, right now, nationwide. And we've only been doing this for about a year and a half, and they're in the new operation. So it keeps me pretty busy, but that's a real fast summary of my history and how I got here.
Wow, it's really impressive, right? So, and I'm also like, it's a lot to.
It's a lot.
You know? It's a lot to hold. A lot of accountabilities there. How do you hold all of that?
It's a lot of balls to juggle in the air at once. Yes.
Yeah. Now, if we just go back a step, how do you start a bank? Don't you need lots of money, to be able to lend it to people?
It helps to have experience working in lending to start with. Our chairman, who's a good friend of mine, I've known him for over 15 years. He's the one that made that call to me a few years back. He actually purchased a bank with two partners. It was a very small community bank about an hour southwest of Atlanta in LaGrange, Georgia. He purchased them about 3.5 years ago, actually. And the bank was not doing very well. It was kind of barely keeping its head above water. But his thesis was it's difficult to be a non-depository institution and be a specialist in this because you have to rely upon, like you said, excess capital, large warehouse lines of credit to fund the loans. You have to then sell things into the secondary market. There's challenges related to that, as opposed to being a depository institution like a bank or a credit union, where that is traditional banking. You take the deposits, you lend them out in the form of loans, and you get repaid. And if the depositor wants their money back, you're able to give the money back. That was sort of the business model that we had, which is we want to continue doing the best at what we do, which is government guaranteed lending for small businesses all across America. But we wanted to use the bank as a funding conduit. So it's a relatively small bank, even to this day. But if you looked at our balance sheet, the only the main core assets on our balance sheet are the portions of non-government guaranteed loans, because we sell off the government guaranteed portion in the secondary market and we recycle the funds. And so it makes us extremely efficient. It makes us very profitable. Our net interest margin, which is a key metric that banks look at, is very high, one of the highest in the country. But to your point, you have a vision, you execute on the vision. Looking at a bank in a little bit different model than probably what most bankers look at. Most bankers are not as excited about doing government guaranteed lending. Most bankers want to be all things to all people. We don't. We want to be highly focused, highly specialized, and it's a different mindset, I suppose, than most of our colleagues in the industry.
So a government-backed loan, then are you borrowing the money from the government effectively?
No. So what happens is we actually are able to offer better terms to our borrowers. So we offer longer repayment terms. We offer less down payment, usually half, maybe a third of what they would get from an ordinary conventional bank. We don't typically have restrictive loan covenants involved. Interest rates are still competitive. We're able to finance different uses of proceeds that are very challenging for a traditional bank. And in return for that, the lender as well as the borrower pay a government guaranteed fee, and the government actually guarantees a portion of the loan. Usually it's about 75% in the SBA 7A, which is what we're specialists at. And then if we do a USDA B&I loan, it's typically 80%. So it basically addresses an area of the marketplace that traditional banks don't want to go. Traditional banks don't want to be lending in rural America for the most part, which is what the USDA program is built for. A lot of times traditional banks don't want to finance startups. They don't particularly care for franchises. They don't want to do business acquisitions. All these are types of financings that we do with our SBA 7A products. So it's, and then we obviously, by having the government in this public-private partnership with us, we're able to make credit decisions decisions that are really for the benefit, not only for us, but also for the good of the borrower themselves. And it's not as draconian as what you would see with ordinary bank financing.
Right. Now, given your passion is, I'm going to say it this way, you don't actually use this word, empowering entrepreneurs, right? I'm going to
Yes,
use that word because it fits
absolutely.
well in my language, but you are passionate about that. So an entrepreneur who, is got an idea or she's got an idea and they're trying to get this idea off the ground. I've coached people like that and they go for funding and they go to venture capitalists, et cetera, et
Right,
cetera.
right.
How would they come to you?
Well, one of the benefits compared to what you just said, which is it's very challenging for a lot of businesses to get venture capital funding or private equity funding, particularly if they're not in the right industries.
Yeah.
If you're a recent Stanford graduate in artificial intelligence or computer science, and you live in Silicon Valley, and you want to start a business, you have a much higher probability of getting financing than if you've just got an idea. You want to make the newest and best umbrellas on little cocktail glasses or something. I mean, somebody does that clearly, but it's going to be a little more challenging for you. So I oftentimes tell entrepreneurs, debt is much cheaper than equity. And what I mean by that is, I'm all about having entrepreneurs try to preserve as much of their ownership as they can. Oftentimes, when you go to sell, if you're raising equity, you're going to sell off pieces of your business and you're likely never going to get that back. And that becomes very
Yes.
expensive the more successful you become. So you have to be very careful about that. I remember years ago, I wrote an article and was quoted in a couple more in TechCrunch, which is a big high tech Silicon Valley type media publication. And that was exactly the point I was making, which is you have so many people that'll watch, Dragon's Den or Shark Tank and feel like they've got
Yeah.
to sell off a piece of the business. And they don't always look at some of the other options that are out there available to them, like SBA financing in America, for instance. It's a good step on their path. I'm not saying someone shouldn't do venture capital eventually, but oftentimes the financing is, if someone truly has a brand new idea, they want to start a business, usually they're putting their own capital in initially to get it off the ground. They might be raising some money from friends and family. They are using VC, but it's usually Visa card, not venture capital. It's things like that, home equity lines, different things like that to get their business off the ground until they have proof of concept. And once they have proof of concept, and what I mean by that is typically they're either cash flow positive, or about to be cash flow positive. They have contracts coming in, agreements, what have you. That's usually when they become an option for the kind of financing that I provide. However, SBA financing has become much more widely used in America, particularly after the pandemic, because, of course, the SBA and their lending partners like us were some of the folks that were on the economic front lines during the pandemic. And we
Yeah.
actually were able to promote the SBA's lending programs so much better than ever had been the case. SBA has been around since the 1950s. And so you're seeing better quality and further along the business cycle. Business owners come and seek out SBA financing because they want the better terms that we're able to offer to them. So I can keep going, Will, but there's a lot here to unpack. There's a
Yeah.
lot
Yeah.
of
Yeah. You can
ways
hear it.
to get
Yes.
something financed. Yeah.
Yeah. It's quite a complex. I'm really listening really intently, right? To get the whole picture because, I have clients and potential clients. I was talking to one last week and he needs to raise around 20 million. Going to do it by getting people in his occupation to buy in a certain amount and invest, right? And it's going to these
Okay.
trade shows and all of that stuff. I think it'd be a lot easier if you could just go, can you lend us that money, And
Right. Right.
it's effectively
Yeah.
what he's doing is but trying not to give away equity, as you said. That is a balancing.
It is. It is.
Yeah,
Absolutely. So he's kind of crowdfunding a little bit, is what it sounds like,
kind
perhaps.
of. Yeah, kind
Or
of.
vendor
Yeah.
financing, maybe even. Yeah. Yeah.
How do people get in touch with you?
They can reach out to me. I sometimes, I have a lot of people coming at me, Will, demanding
Yes.
my time. So I sometimes play traffic cop and put them in touch with the key person on my team that's
Yeah.
most available at the time. But
Yeah.
yeah, they can reach out to our website, communitybankshares.com, Phoenix Lender Services, phoenixbusiness.com. Usually we say PX or PHX, not, we don't spell out the Phoenix, by the way, just in
Right.
case wondering. They can Google me. I mean, I'm on LinkedIn. I've got, thousands of followers on LinkedIn.
Yeah.
Google me. You'll see articles I've written, all sorts of different things. Yeah.
Yeah, it sounds to me like, if you listen to the show, if you've been trying to raise money and it's going slow, at least it's worth a conversation. We never know. You might be able to come up with something.
Yeah. And oftentimes, like I said, debt makes a lot more sense than equity in many cases. Not always, but in many cases. So I always try to, consult with people to make sure they're doing the right thing that's best for them in the long term. It's
Yeah.
like I said, if you give away equity, it's really hard to get that equity back.
Yeah.
And if you're really successful, you'll be kicking yourself one day that your uncle owns a piece of your business or whatever the case
Yeah,
is.
it's too quickly done, isn't it? In the
Yeah.
heat of I'll offer you this, okay, when you need the money or your business is on the brink, right?
Yep.
Yeah. Thank you so much for being on Free to Lead, and I hope that people are listening reach out to you rather than give their equity away. I mean, I think it's very smart. I like that. Debt is cheaper than equity.
Yep. Definitely.
Chris, thank you for being on Free to Lead.
Thanks for having me, Will. Take care.